Hi everybody, this is GCM, Global Capital Management, and we're here today to talk about loan notes investments and how this can greatly increase the amount of commissions that you earn from selling loan note investments to investors. So what we want to touch on today is just to tell you, or rather educate you about what loan note investments actually are, why they exist, and how they can be beneficial to investors and how to pitch it. So in simple terms, a loan note is simply an IOU document from one party to another. In most cases, in the loan note investments that we offer here at GCM, the loan notes are with property developers that are looking to accelerate a build project. So actually the loan notes enable the borrower, i.e. the developer, to receive payment from lenders, in this case investors, on the proviso that they're paid back the capital that they invest after a set amount of time with interest. Now typically the loan notes investments carry rather healthy yields for investors, maybe 8%, maybe 10%, sometimes 12% per annum. They work very well most times. We do a lot of due diligence here at GCM in order to facilitate the fact that the loan notes that we offer are of the highest quality. They're always asset backed. We don't go for any loan note investments with any type of institution that doesn't actually offer an asset backed security. So when talking about the securities that are involved for investors, typically the investors are given first charge or a debenture against assets that are owned by that particular company. So they're quite secure. In fact, they're very secure because the companies that we offer the loan note investments with have been around for a long time. Often this is their fifth, sixth, seventh, or eighth time of raising capital, and they've been around for a very long time and are very well respected in the industry. So for the loan notes, they're not regulated. It's really important to specify that they're not regulated, and often they're considered higher risk. But because the loan notes that we offers the security of a first charge over the company assets, or the land, or the property that's used in the development project, what tends to happen is the investor's investment is rather secure. Now, let's just have a look at why developers try to raise money through loan notes rather than going through a bank. So developers, they will use bank funding from time to time, often quite a lot, but typically they don't rely solely on that because bank funding can take time to arrange, sometimes up to 3 months, even longer, as you know. So a number of successful developers, they tend to develop a multi-sourcing strategy, and they offer these loan note investments really only to high net worth and sophisticated investors, i.e. they've already invested something before. This isn't their life savings. This is money that they can, in inverted commas, risk, but it's not a risk because it's very highly secured. Now, how does the security work to protect the loan note holders, i.e. the investors? Well, always a security trustee is appointed to represent the interests of the loan note holders, the investors. First legal charge is always held by the security trustee when a land site or building is purchased, and in addition, the security trustee holds a mortgage debenture over the assets of the developer itself. So you can see the loan note investments that we offer here at GCM are very well respected and very secure. Now, from an investor's point of view, when you're pitching this to an investor, there's a number of questions that they'll be asking you. First of all, when does interest begin to accrue on their particular investment, i.e. their loan note? Well, as soon as the investment funds have been cleared into the developer's bank account, interest on that loan note begins to accrue for the investor. Now, as I said, some of the loan note investments we offer here at GCM pay 10%, 12% per annum. That happens from day one. So unlike investing in off-plan property where they'd have to put down a reservation fee, etc., and wait months before they start earning any real type of interest, this is completely different. This is a hands-off investment, just like an off-plan is really, but far more easier, and the entry levels are lower. Sometimes Investors can invest from as little as 5,000. Often it's around about 10,000 or 20,000 pounds, but the low note investments can last for either 12 months, 2 years, or 3 years. So, in an example where a low note investment is for 3 years, offering 10% interest per annum, that means for a £10,000 investment, the investor receives 10% per annum plus the whole of their original capital that they invested back at the end of the 3-year term. It really is a very, very smart way for developers to raise finance and for investors to invest in a hands-off investment. So, what's the buying process when you're talking to investors and they're expressing their interest in this? That might be saying, well, okay, this is interesting, give me more information on this, but what is the buying process? How does it actually work? Well, it couldn't be any more simple and straightforward. It's a simple application process that when it's accepted, all that happens is AML checks have to be done, i.e. anti-money laundering checks have to be done before funds are payable. Once everything is deemed to be absolutely fine with the investor, then the monies are deposited, and once received within 30 days, the investor receives a welcome pack and a signed loan note certificate. That's theirs. Going forward, then monthly email updates and quarterly printed newsletters are sent to them, keeping them updated with everything that's going on with that particular investment or the development. It really couldn't be an easier investment for investors. It's a very, very simple pitch for you guys. The commissions are very, very healthy. Please take a look at the low note investments that we have on our website. We're continually updating them. As I said, we do our due diligence all the time, and we always ensure that every investment, a low note investment, is asset backed with a reputable company. So thanks for listening. Have a look at this. Speak to you soon. Cheers. Bye bye.